Hi. One of the good things about semi-retirement like mine is that I have time to try out investment approaches I have not tried before. One of these new approaches is options. The kind of investment newbies think will make them $1 million on an investment of $2.95. Now, why did I do options before? Because I couldn't get the kind of an edge, an advantage I can get in sleuthing stocks. You see, when you sleuth a stock physically, up close and personal, or rather the company behind it, you get information that the mopes who stay glued to the internet screen can never have. Like what kind of information? Oh, that the new president has been me tooing the secretary and his wife just caught him. So he won't be there for the long term to turn the company around. Or that the new super product you bought the stock for is a copy of the competitors who is about to sue them. You know, the stuff not yet on the internet, which you can only get if you sleuth the company as a physical entity, not as a blip on a screen. So back to options. There I never could get such an edge, so I didn't do options up to 2 or 3 years ago. So why am I speaking about options now? Because I think I just found a way to make money with them. How? Like most other things in the investment field, find out the most important factors. Ideally, only one or two, or at most three. Focus only on those and forget all the others. It's the last part which is hard. Forget the incidentals. Which means, in simple language, I found that only about 1%, 1 in 100 options, is even worth considering to sleuth the company behind it. Why so few? What do these 1% have that 99% of the others don't? The 1% of options worth considering spending your sleuthing time on must have three factors. The first factor, the underlying stock must shoot up or down fast enough from here. Second thing, the movement should be fast and soon to targets that you can recognize in advance. The third factor, you must have high confidence in all the above factors, the timing of the move, the price target, and the speed. This third requirement is almost wishful thinking, and it's the hardest of all. How to get it? You got it. You sleuth the underlying company to know why the stock behaves as it does. But how to choose these sleuthable, optionable stocks? Luckily, there's a category of stocks that, in my experience, are almost ideal to do options on, which are the same kind I love to sleuth to buy them horus bonus. The predictably cyclical. Those stocks will go up and down as they grow, or rarely as they decline. In such stocks, if they have a history of 20, 30 years behind them, you can often gauge how long a typical cycle takes and how high and low they can get at the beginning, at the end of the cycle, based on fundamental ratios at the bottom, at the top. Price to book, price to revenue, price to capex, price to cash flow, all the rest of the good stuff. Then, if and when you find the stock is close to the bottom of the cycle, you can then estimate how high it can get, say 2 years from now, and fairly accurately about the time. And then you can consider buying 2 years calls on it, or vice versa. When it's at the top, you can buy 2-year puts. Now, why stock with a 2-year cycle to do the options on? Why not 3 or 4? Because you rarely get an option with a strike of more than 2 years away. So practically speaking, 2 years is what you have. Here is a typical example of a stock, which I had mentioned before. The stock is ALB, Albemarle Corporation. I show it on the screen, freeze the screen, so you can print it later on. It's quite a busy chart, but we'll need all the items. So freeze it, print it, and we'll talk more about it. Albemarle is a processor of lithium, as well as other trickier metals. The relevant chart shows you several things. First thing, there's a clear cycle to the company stock. The sleuthing the company behind the stock will teach you that this cycle is related to the capex cycle of the company investing in machinery. The cycle shows bottom to bottom of about 2 years, which is what we want. More than that, the second factor is that every cycle, the bottom was higher than the previous bottom, and the top higher than the previous top. That's a classical bull trend, high highs and low as low. Factor 3. This is related to the company's strengthening market position, which you will find if and when you sleuth it. Don't just rely on my work. As I noted in the previous clip, ALB, like most high-level refiners, whether for metals or for fuel, are a collection of tubes in a plant with an IP, intellectual property, a patent on each, a patent most of which are owned by the company. Now, factor 4. The previous peak was $322 versus $67 for the stock today. So if the company's improving market position persists, which you'll have to find through your own sleuthing, the next stock high is likely to be higher than 322, perhaps as high as 400 if previous peak-to-peak rises persist. Now, why is the 2-year cycle important? Why wouldn't I do options on cyclical companies with longer cycle, 3 years or 4? That's because, practically speaking, there are no standard options on the option market beyond a 2-year strike. For ALB, today's furthest strike is for January 2027, a year and a half away. Yes, you can buy leaps, long-range options that the broker will create for you a la carte. But to do so, you must be a player with millions of bucks of options, which I don't think the audience of this clip is. Let's continue. So what do we have? We have the assumption that ALB had been bottoming here. And remember, I fingered it a few months before as a bottoming stock, and the stock promptly fell 30 to 40% from there. But then, stock bottoms of cyclicals are always messy, as this one is. At present, we have ALB at 67 with an estimated peak of 300 at least, possibly more, 2 years from now. Maybe. This alone would indicate 4 to 5 times potential in 2 years. On its face, a junior multi-bagger, if your sleuthing proves the fundamentals, which for now you only have my word for. Now, what are the negatives? First, the 2-year cycle may change. It can become 3 or 4. Or the stock may go flat without any cycle. Second, the business can fundamentally change in the dominant lithium refiner. But third, there can be a market crash coming based on the negative yield curve that I told you before, so you may not want to own any stocks a year from now. The first we can ignore. The second can be resolved via sleuthing, which I suggest you do. But the third would imply that an option would be the best here, since you can only do it in an amount you can lose, whether if you buy the stock holus bolus, all the amount is at risk. Now, what would an option give you? Here the question is, what is the strike price for the option? The strike is the price in which you can exercise the option. The time horizon would be the max, so we'll have an option exercisable at January 17, 2027. The price of that option today, if the strike is 160, would be about $2. But we'll assume that the stock would reach close to the previous peak in the time frame, say 300, or to be safe, even less, say 200. But what would the strike be? As I said, 160. Why that? For a higher strike price, you'll pay less for the option, but also have a lower chance of making money by exercising. On the other hand, if you choose a lower price, you are going to pay more for the option, but have a higher chance of exercising. So how much can you make for an exercise? It will be the difference between the target, say 300 or even 200, and the strike. The return will be that amount divided by the call option price. In the case of the stock reaching 200, for a strike of 160, the return would be 20 times. If it reaches 300, which is, remember, below the previous peak, it would be 70 times. Wowza! Sound extraordinary? Sure is. But that's because you are loading the odds in your favor by only doing options on the cyclical stocks where the pattern is fairly predictable and fairly fast. So that's it. If you understood the above method, you can easily concoct a spreadsheet that will tell you whether a call on a cyclical stock is worth your sleuthing time. In the spreadsheet, the input would be the strike price of your choice, target price based on the chart and your analysis, and the strike can be a previous peak or almost there, and the option price and the underlying stock price. These would give you the potential for the stock itself in multiples of today's price and for the options in multiples of today's price. And now come again the tricky question. What strike would maximize your profit? As per the option price, would it be mid-price from today and the target? Say 2/3, a third of it? In this calculation, ChatGPT or any other AI can help you optimize the strike price. No, it won't be the AIs you get for free, but the one you pay for. What I do, I'll compute the the return for 2 or 3 strikes, each of course a different return, and then I triangulate on what's the best. As a first approximation, midpoint is usually good enough, which now is about 160. Now here, the return would be between 20 times for a target of 20 and 70 times in 2 years on a peak of 300. 2 years between 20 times and 70 times. That's quite a bit, isn't it? But remember, this is only on predictable cycles with a cycle of bottom to peak of 2 years or less. And remember, you can also get 0 because the stock may never move. So let me repeat the 3 factors. What you want to have is fairly predictable bottoms and top levels based on sleuth fundamentals. You want to have a short cycle, bottom to top of 2 years at most. And 3, you want to have high confidence in the 2 above based on deep sleuthing of the company behind the stock. Now, you may ask, obviously, why not just buy the stock outright and get the 4 to 5 times in 2 years? The answer, you of course can. But you may want a higher return. And as I said before, you may want to keep your capital for other opportunities and limit the amount of risk in a market that may always fall out of bed. So there you have it. That's the only way I do options. Predictable cyclicals for the short, violent cycles in which I have high confidence. Nothing else. You want to do other options? Be my guest. I never do them. That's all for today. Please let me know what you think of it. And if you like it, subscribe and forward to all your friends subscribers so they're subscribed too. Then buy my books, The Sleuth Investor, The Advanced Sleuth Investor. And if you like them, give them a review on Amazon, which I hope will be a good one. I'll see you next time. And meantime, thank you very much for watching.